So why does trading gets more and more difficult the longer you trade? So this has been one of the biggest myths that I used to have as well. I remember when I first started trading, we're not talking about the first few months, but generally on your between that first to second year, you realize that hey, you're making good decisions, you are making consistent profits, you have really high quality setups, really beautiful risk reward trades sometimes. But as more experience you have, you realize that hey, my performance is actually declining, my profitability is actually declining. So why does it actually happen? That's because what I call we are contaminating our own performance by receiving too much information. So I'll give you one example. A really successful traders, as I've talked about this in a previous workshop as well, are those who really focus on a specific market condition and really try to juice the most profits out of it when the condition's correct, when everything's aligning to his playbook or trading plan, whatever. The losing trader or inconsistent trader are those who try to be all-rounded, those who try to master sideways trading, master trend continuation condition, master reversal, master mean reversion, whatever. So the biggest reason why you fail to achieve profitability or consistency in general is because you are juggling between too many information. You are a good trader, you are supposed to have a good results, a good outcome, but because you got too much information in hand, you don't know how to utilize each of them. Here you know a little bit about trend continuation, here you know a little bit about how to trade a flag, how to trade a wedge, how to trade a double top, whatever, but you don't master a specific thing. If you want to become consistently profitable, the best advice I could ever give you is to focus on one thing and make sure you're good at it before you start diversifying onto other strategies, other market condition, or different trading style. That's one big lesson that I want to remind all of you, because when I first started trading, I told all of you, I only traded pound dollar and I only focus on reversal pattern, which means if the market is just trending nicely, forming high highs, high lows, I try not to get involved. Some of you might say, hey, it's silly, right? What if the market goes into trend for a month straight? Then I'll try not to trade. Why? It's because I know when market is in a nice trending condition, my aggressive nature, my personality tends to have the mindset of it can't go that far. It must reverse very soon. I always have that kind of mindset. That's why I was able to identify my personality. Then I realized, hey, every time when market keeps grinding or keeps pushing into one direction, I need to step away from the chart. So this could be a good example for any of you. If let's say right now you're someone who's extremely good at trend continuation patterns, which means when the market is not moving anywhere, let's assume the market is in a range bound condition in general, you will have the tendency to always assume or expect price to break up. So if you always have the mindset of I'm buying at the low, I know I'm supposed to TP at the highs, let's say market is in the range, but you somehow, the back of your head just keeps telling you, hey, it's going to break this time. Let's hold it a little bit further. Do you have this kind of experience? If you have, please, after seeing this workshop, let me know, because I was the one who do this as well. Every time a market turns into a range bound scenario, I tend to buy the low or sell at the high, expecting or predicting the market to break. And that really hurts my equity in the long term, because a lot of times I always say when the market is in a range, we trade the range. When market is in a trend, we trade the trend. We trade by evidence. We don't trade by our expectation or our prediction. Traders who like to predict the market, who have the habit of expecting market to perform a certain way, that's how we define a confirmation bias. If you have a lot of confirmation bias in the market, which means let's say today you take a reversal trade, you take a double top, you get stopped out, any signal that appears in front of you will turn out to be a reversal signal, will turn out to be a double top signal. Again, this is something that I've experienced a lot in the past. Confirmation bias is one of the things that it took me a lot of time to eliminate, and to have the flexibility, that neutral state of mind when I'm trading the market. That's how I was able to scale up. That's how I was able to turn into a 6-7 figures trader. So go back to the topic of this video. Remember, don't contaminate your trading performance by receiving too much intake, too much input, because if you're doing so in long term, you'll realize that your performance will slowly decline, go back up a little bit, recover a little bit, further decline, then you're going nowhere. So what I want all of you to do is to focus on specific, whether if it's on education, specific trading style, specific market conditions, specific strategy, specific pair, master them. Make sure you have at least 3 to 6 months of track record of being profitable at this specific strategy, specific pattern or pair. Then only you say, hey, I'm good at this, why not let me learn something else? All right, so this is going to be the end of this workshop. Again, it's a short workshop, and I hope all of you learn something new, and I'll talk to you all later. Bye bye.